Before we get started, you guys know that this stream is recently newly sponsored by Woo. And Woo is a phenomenal exchange. The thing with Woo is that most of their eggs were in one basket, but Woo is offering basically the best liquidity and execution and fees for, I would say, 90% of people, honestly. They'll see this exchange, they'll see that most liquid pairs are going to be BTC and ETH. But there was an issue last week, I think it's going on over a week now, where Kronos was hacked. And because Kronos was the dominant market maker, they removed funds, right? They ended up pulling liquidity. And by pulling liquidity, Woo had shut down trading, and I think they shut it down for 2 hours. And this is something that's not frequently done on exchanges. So I still think it's a phenomenal exchange. I'm still going to partner with them, but you have to make up your own mind. So first thing I want to mention, because this is relatively new news, I don't know if you guys saw, but some people on Coinbase have been getting emails from Coinbase saying that Coinbase is being subpoenaed. And this is in relation to Bybit activity. So there is a case by the CFTC. So that is the Commodities Futures Trading Commission, basically the SEC of commodities, who arguably should probably govern most of this market, going after Bybit. Needless to say, like I've said this many times before, once TradFi came here, the die was cast. Once TradFi got involved and interested, it was only going to be a matter of time before they swallow up everything. So the CME, as you can tell, has gained a massive amount of market share. In the past, it's gone back and forth, but it's maintaining now. You'll see Coinbase be a major beneficiary of this. They're definitely going to be a winner. And you can see Coinbase stock benefiting in advance of what will continue to be this process of sort of culling the current centralized exchanges. For the most part, this is something I've said for a long time now. So we see this news, right? This is relatively new. There's some people that they're saying that they're getting an email and they never traded on Bybit. So I don't know exactly how this email is being sent out, but I had said on a SyncQuote Spaces last week. And for anyone who's just following along, I am part of the SyncQuote team. So I'm an investor in SyncQuote. I'm part of the main core team of SyncQuote, which is a decentralized options exchange. And you can imagine DEXs will really benefit as this process continues, but then there will be DEXs that absolutely run into issues, right? So DeFi is going to run into issues. There's really, I hate to say it, but there's almost like there's no escaping the long arm of the United States. And I think people got really used to this fight with the SEC, where it's almost like because the CFTC wasn't constantly in the news, it was easy to maybe think that they were a little bit more innocuous and yeah, we don't have to worry about them. They want control over this market. They're going to do the right thing. You know, the SEC is the bad guy, but I just have to tell you that one, they're not necessarily bad guys or good guys by any means. They're regulatory bodies. They've been doing this for a long time now in markets. You have people like Gary Gensler, right, that are definitely not favorites, but by no means is the CFTC going to take it easy on this market. They just want to be the ones that have the reins of this market, but it doesn't mean that it's just going to be a different regulator dropping the same hammer with a different label on it. That's all it's going to be. So I mentioned last week in the SyncQuote Spaces, when we were talking about the Binance settlement, I said this verbatim. I said that money from the settlement is not going to fix potholes on roads in the United States. It's not going to go to schools. It's not going to go to healthcare. The billions of dollars that could solve many problems is literally just going to go toward funding the rest of the witch hunt. That's all it is. So just expect more of this. Expect, honestly, every major centralized exchange to be, if they are not already publicly in the crosshairs, to eventually be. If they have over, I would say, $1 billion in open interest, whether that's legit or not, if they're an exchange that you see shared often, even if it's a B tier exchange, it's inevitable. There is no way around it. This is just what happens when you have entities like BlackRock swooping into this market. And I don't think it's going to make the market bad. I don't think it's going to make the market unfavorable to trade. I'm going to take a look at BTC high time frame. I don't think there's much to do up here. I ended up buying some protection earlier today. So I ended up buying some, they were almost in the money puts at the time that I bought them. So 36.5 ended up buying 36.5 strike puts as just basically insurance. They're trading much cheaper compared to calls. I do think that my opinion on the ETF, how it plays out, has not changed, right? So I think the ETF is going to mark an interim term top. So let's just clarify what I mean by my timeframes, because it's something that changes from market to market, or I should just say from crypto to every other market. When I'm talking long-term in crypto, I'm talking 6 months plus. When I'm talking short-term, I'm talking anywhere under a month. For me, short-term really means, for the most part, if you looked at that distribution, it's mosely under a week. Intermediate term is this kind of muddy area between 1 month to 6 months. Long term in crypto is short term compared to TradFi. If you're trading stocks or commodities or any other product outside of crypto. So my opinion is ETF announced, market is going to jump up. you can already see that the market, it's becoming a little bit less liquid to the downside, but it's definitely illiquid to the upside. So if the ETF is announced, or rather when the ETF is announced, I think it's basically a foregone conclusion at this point. I mentioned this on the SyncWhat Spaces. I am mindful of the fact that this is the only time where it's not weird that everybody has the same exact opinion on what's going to happen. I could say we're almost all but guaranteed to get an ETF, but it is weird that no one thinks we're not going to. So it represents an area of the market that can definitely offer a fucking crazy asymmetric convex payout if you were going to take the other side of that. Like if you bought far out of the money puts and your thesis is that either you're hedging some kind of tail risk of it being denied, or your thesis directionally is that it's going to be denied, the market is going to fucking fall off a cliff. And that'll recover, right? That definitely will recover because we have other things, narratives we could create moving forward, and it'll just pass in the next administration. But, needless to say, that's not the outcome that's likely to happen. BlackRock is a kingmaker. You're going to get the market. It's probably going to spike up. And I would say anywhere, if you look at the fake announcement was in the first 30 minutes to an hour after Cointelegraph, 10% move, at least just say the ETF announcement. So let's say it gets announced here. I think this is almost perfectly to where I would say the ceiling is. I think we could tag 40,500. Like I said prior, I said this going back on November 10th, the market is topped. You just don't know it yet. That's because I think that this ETF announcement, that does offer a move up. So if you're able to ride that, by all means, good for you. But I think that ultimately gets sold off and the market consolidates and possibly sells off a little bit more for the next maybe month or two after that. That's my belief. I think that's what's going to happen. Does that have to be what happens? No, absolutely not. But I do think that this is long-term. It's a net positive, absolutely, for BTC. So brief pop up, intermediate term sell off, consolidate, even correct sideways. I wouldn't say that we have to go lower, but just never be surprised if the market comes back down to 32, 33, right? This is a big imbalance move up. It's a big gap, inefficiency. The market has been really bid since then. So it's very different from prior consolidations where it was a lot more balanced and there was a lot more two-way trade and there was not really one side dominating the other. I talk about leading directional grinds, talked about it plenty of times. This is a leading directional grind higher. So it shouldn't surprise anyone if this one pops up. And it's definitely respecting this trend line, right? I don't really draw trend lines diagonally for the most part unless they really stand out, right? And that's because this will get broken through time passage alone, even if price doesn't do anything. When a trend line is being respected and it's obvious and it's continuing to be respected over the course of a month, it's showing you some level of acceleration, rate of change, or just consistency. That is a very clear trend line. It happens to be the one standard deviation band from the quarterly VWAP. And the quarterly VWAP, I'm using that because it's actually just the same as anchoring a VWAP from this prior low. It captures the entirety of this move. So for the entirety of this move, you're looking at a volume weighted average price of 32,851. So bulls very much in control above there. I think if you just start breaking this trend line, honestly, you could start seeing a cascade, because the thing about trend lines is, and ones that become very well respected, is you have these successive higher lows, which sets up for stops. And if you think about, the average price of this consolidation grinding upward, like if we put on an anchored VWAP here, I'll just, for the sake of doing this quickly, we'll just use a fixed volume profile. Here's your POC up here. So most of the volume is up here. If you consider that the volume weighted average price up here is like, let's say 36.5, right? You are looking at a market that on average uses leverage of up to 5 to 10%. So it wouldn't be weird for us to wick all the way down here, stop out positions, cause that deleveraging event, and then reverse course. Right? Not reverse lower, but then reverse higher. So high time frame, it's, you're just chopping people up left and right who are betting on lower, who are betting on much higher in the short term. And there's not really much reason, I think, that if you built spot positions much lower, that you should sell. And I don't, not financial advice by any means, but from a tax optimization standpoint, I mean, you're looking at, I'd say on balance of probabilities, higher prices almost guaranteed into the end of next year. So you figure it's November now. What are the chances you think prices are higher next year? How much better is it to lock in long-term capital gains than short-term capital gains? And who knows when your first, what your cost basis is, when it was established for more recent coins. But you have to start thinking about tax optimization, right? So when you have alts trending really hard, there's a couple things you could look for. One, the first 30% correction. So we'll just go to what's a popular alt, FET. Okay. That 60 level was triggered back here. So that is your first 60 level trigger on the RSI. So things really cooling down, right? Cooling down 60 before 50. Why? 50 is midpoint. I just try to give a little bit of a cushion for front running. So 60 was the level I chose. I mean, back test it. We broke 60. This off the top was a 20% pullback. All right. So you're not getting deep pullbacks in the really strong alts. But if we go through, during really strong trends, you just set alerts for these things, guys. Set alerts at either cool down levels in any kind of momentum oscillator. Definitely set alerts or monitor your pullbacks, right? So if you're looking at really, have we had any? We've had some 30% pullbacks. So you can see the first time that 60 was hit back here and you were given a almost 20% bounce. I know there has to be one that has pulled back 30+% already and bounced significantly. Maybe we won't find it during the stream. But nevertheless, that's kind of a good threshold to work off of. So if you see an alt that has been trending really strong and it's been pulling back 10%, 15%, the first 30% pullback is when you should start really paying attention. Again, especially if you have that sort of corresponding cooling or confluence in some kind of momentum indicator, whatever you use, or other tool that might help you get behind or get entry into position. See, off the high. And we're talking about going off the high. I guess just some of the alts that I'm looking at right now, this is something that it's important to still repeat, is the alts that were strong in the beginning of the alts that I think are going to continue to be strong moving forward. So Solana, Link, this is a near 30% pullback for Tau. Oh, you already got your first 30% pullback. So it's a good example, right? So 30% off the top for Tau, 28, 29, whatever, close enough, right? If you're waiting for 30, you might run into some trouble. But you had that bounce. So it's just one thing, right? A 10% pullback in an alt is nothing, right? That's like part of your average daily volatility in some cases. But what I would be paying attention to moving forward is honestly AI, because I think that in this cycle, you're going to see a lot of current crypto projects rebrand or associate themselves with AI. I think that that's absolutely something that you should be focusing on. And then also new pairs. So new pairs, no real price history, okay? So none of that bearish psychology inflicted on you by seeing that something has come down 90% off its all-time high and has been moving at the lows for months. Even though the market might look at that as bottoming process, fresh charts, endless possibilities, right? SU is another example. Okay, so I have an alert set for SU that is based on actually a trend line break. So simple shit in this market right now is working. So diagonal trend line breaks. You can see this trend line is actually an alert. This is one of them that I've been eyeballing, MAV. Some of these are smaller, guys. So, by no means do I want to influence the price of these. I haven't shared this on Twitter, but just fresh charts. Okay, so BONK, so far bonked by the Binance listing, right? Now, it's not much of a pullback. If you're looking at the log chart, this so far was over a 30% pullback. So the first 30% pullback for BONK right here. Well, actually, you probably had a couple. That's going back to early November. This one over 30, so bigger pullbacks for BONK. BONK is thin. 30% pullback is not going to be for your thinner, smaller caps, right? So something under $250 million market cap, so something thin. But with BONK, to be fair, Binance hasn't listed a spot market yet, which is mostly what I meant with topping this in the short term. But they listed perps, and in anticipation of perps, market got a little hot. It is putting in this temporary top and correction. But what I will say is in favor of people that are long BONK, I do have a spot position in BONK. I have more positions than I've had in the last year. I put on in the last month. With respect to BONK, so 1,000 BONK, right? Similar to Pepe, they have the different contract value because of the size. So earlier today, funding was jacked up. So if you looked at BONK funding, this is by the 8-hour interval. It was over 10 basis points on Bybit. You can see it was upwards of 22 basis points on Binance. I looked at annualized just to think in terms of how much money it would cost, how much decay and drag would be on that position if you annualized it. Bybit is over 100%. Binance is over 100%. The idea would be you couldn't hold a perp that long. You'd be liquidated. Unless the market continued to rip up greater than that, right? You have to beat that level of funding, which becomes expensive if you have new positions on. So it's a matter of if there's new open interest on, paying that funding, it's more significant than someone that is up considerably. But it's also, it's significant to them too, because they might just want to lock in profits if the market's not returning greater than that rate of decay. All right, guys, thank you for tuning in. If you're interested in any of the platforms that I've been sharing, just shoot me a message, right? They might be below. The links are below for some of them. If not, just reach out to me on Twitter. And don't ask me too many crazy questions, but if there's something that you want to know, what platform I prefer and stuff like that, feel free to hit me up. And yeah, don't let the bankers take your Bitcoin. I think that's actually applicable this time. Yeah, man. Yeah, ladies. Yeah, whoever's out there. Until next time. Hope you guys have a good evening.